I warned you a few weeks ago that we were moving into the negative region here with the S&P trend direction, and there was risk December top. But again, I have the guts to tell you exactly what I think. Very few people do. I thought it was going to be a wave 4 and that we would end up moving back into positive territory with the trend direction, and I think that would mark it as a corrective wave 4, and I think that that has now been proven to be correct. The following week we got into, so again, we moved into negative territory a couple weeks, and then now we're turning back into positive territory with our previous week's close and building upon that, and we got above the signal line here, showing that the volatility oscillator was showing, hey, volatility was increasing, but I told you we were likely going to turn off of this trend line, which in fact is what we did. So again, I think this buys the market more time, and again, going to tell me this is going to confirm when we have a market peak. It's not going to call the day of the top, is what it is it's going to confirm a top by going the trend direction going into the negative region and remaining there, by getting back above the volatility line and breaking out of the downtrend of this wedge pattern again. And when we see the volatility increase like we did over here at the 2022 top for the S&P 500, volatility increasing above the signal line, the trend direction going negative and remaining there, then again, that is a recipe for a big sell-off. I think it will terminate the bull market the next time this happens, where we go negative and remain there and get above the signal line and remain above it there with the volatility oscillator. So again, in 2022, all these signals turned bearish the week after that, but then remain that way, volatility rising and the trend direction remaining bearish. Again, other corrective moves taken us in the negative region with the trend direction, but then we've recovered, and I told you I thought that was going to be the case here. So I just wanted to update you on that, because again, it's going to be the next time when we move into the negative region here. I think it's going to be very soon here. I think we're going to go up and reach the upper channel line, but then I think that we will turn down, and when we do, I think we'll end up turning back down into the negative region for the trend direction. I think we'll see volatility sharply increase. Again, as I said, I think we're building, and I talked about this before, I think we're building a larger divergence, and it may even go higher up onto this area. I think we're building a larger divergence with the trend direction, and these downturns have given us sell-offs like the August and September and December sell-offs that we got. December 1 took us into negative territory. We're now back in positive territory. So I still think this is under construction. And again, I still think we're going to go higher. I do believe we'll pull back on the S&P first, the Fed next week, but then I think the advance will resume after that. And again, here, the volatility oscillator turning back below the signal line, getting back into positive territory with the trend direction. And here is the S&P up here. And again, when we had the large divergence between the S&P 500 and the trend direction here, again, it marked the peak, and eventually the volatility got above, volatility oscillator got above the signal line there, and we moved into the negative region. Did a very good job of marking the top. Told you I thought this was corrective. I thought we had a wave 4. Told you I thought we would bottom of January 13th, and I think that that has now been proven correct. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you could take a moment to do that, I would really appreciate it. I don't have any sponsors. I just want a direct relationship with you. And so I just ask that you do what you can to help out. If you could take a moment to do that, I would really appreciate it. Watch my video from Friday. Again, I was looking at some of the recession indicators showing we're going to have a recession. Before the recession hits, the market will top and begin to price that in. I think we're going to pull back with the Fed, back test this trend line. I think we will remain in a bullish reversal of conditions with momentum. I don't think we're dropping below 58.88 currently right here at this lower boundary. The 10's getting back above the 20. I think we're moving back to those moving averages. I think we'll kind of come back and fill the breakout gap right here at 59.38. And I think that we'll end up getting a higher low and a Fibonacci retracement and complete wave 1 and 2. Might go a little higher and then do it, but I think you're going to end up pulling back probably with the Fed or with major earnings here. And I think these signals will remain bullish. Now, if I just bring up the 50-period moving average, I think eventually, well, price is above it, and eventually the 10 and 20 are about to get above the 50. We'll probably see the 10 do it early on next week, and then eventually pulling back. We'll see as we pull back and back test, we'll probably see the 20 get back above the 50 in a bullish realignment of the moving average trio. Now, another thing, daily on the weekly, we got a bullish reversal of conditions. I think we're going to back test. You see the little blue arrow? You see the blue bar there? We're getting above the cloud. This is bullish. I think we're going onward and upward. Watch the video all the way through. You'll see the targets where I think we're going, the trend lines. I think we'll get a green bar even if we pull back and get this divergence in the most recent price action. And I think that will complete the top at the target levels I'm talking about. And it's all pointing up to that 63, 40, 50 area or so. Again, the channel from the 2020 low, the pandemic low here on the S&P. Again, this upper boundary right here on this channel. This is a linear scaling. And then with our log scaling, again, all coming in right around this area from the 2022 low. And again, the upper channel line in that same area. So, and again, the upper boundary here forming a rising wedge. It was a channel line there on the linear. Here, it's this rising wedge. And here's a channel on the 2023 low. Upper boundary here is what I'm looking at. From the 2023 low, we don't have a channel. We have a rising wedge. And again, pointing towards that same area. So pretty fascinating. Talk more about this in just a bit. Now, again, I warned you on January 9th and 10th that we were likely going to come back and fill this gap at 57.83. That's a presidential election gap from over here on the 60-minute chart. And I told you right there is that 2023 trend line. I told you I thought we would bounce here and that would create a bottom. That's exactly what happened. Also, the Russell, I told you, was right above the 200-period moving average on the trend line as well. I told you I thought the Russell would hit the trend line and bounce. And bullish divergences developing on the Russell and the Dow daily charts. And I told you they became very, very oversold, and I thought they would rebound back up. Again, the conventional wisdom was, oh, not going to have a December sell-off. I told you these divergences were telling us we were going to have a December sell-off, and the divergences on the the divergences on the daily chart. This is a 60-minute chart right here. But again, and that evolved into this head and shoulders formation. And again, the folks that were telling us there's no way we're going down, that this isn't going to happen, then all of a sudden down here, they get extremely bearish. Bearish at the top or bearish at the bottom, the herd. Some of them. We got this rebound back up. You know, Bitcoin did the same exact thing. And again, they both evolved into the bull flag patterns. We broke out the day ahead of inauguration day. I think we're going to fill that breakout gap in all likelihood at 59.38. I think you'll end up getting some kind of pullback here. They have a minor wave 5, and I think that this is our first subwave of it here. And maybe it's done, maybe it's not. But again, very well could be done here. And I think we will likely get some kind of pullback. I remain bullish and think we're going higher, lead to the 6340 to 6400 area, depending on when we reach my trend line target level. Trend line's a target, not a number. To reach it with the rally here in November and the rally in December, we failed to reach that trend line in the weekly time frame. That's why I told you I thought we'd make new all-time highs. We are. I think you're going to pull back at some point. And I told you we could pull back before making new highs or just after making new highs, but I think you will get a pullback and a back test. And again, we're going to hear all this news about a double top, and here we go. This is it. And again, likely more upside, but the time is short. December and January sell-off bought us more time to reach the objective target, but again, we're likely going to get pullback and then go on higher, reach it, and then peak in the not too distant future. So again, I remain bullish. I think we're going higher. I think we'll get a pullback, but then I think we'll continue the advance. Get up there again, just like over here at the December top, just like back at the July peak. The folks that are telling us there's no way that's going to happen, no way we'll get a sell-off, and say the same thing when we reach the top. Time it will be different, and that again we'll get a reversal and we will stop making new highs and the market will begin to usher in a bear market. So again, I think that this is what's likely happening. Now have the 50 back above the 200. We'll probably see some kind of throwback, maybe go a little higher and throwback, but we've got the negative divergence developing here on the RSI. And I told you to be watching to see if that develops. If we went to new highs or if we pulled back, set up at a later date, it could have happened either way. But again, we did get the divergence and ending up setting up right here, right now. Bottom I predicted, the rally I predicted, the sell-off from the December high. The 60-minute chart is worth its weight in gold here, man. And look at the bullish divergences that we talked about. Why did I predict a bottom? Well, peak of stinking boo, this right here. That's why I was predicting a bottom, and why I was predicting that we were going to get one more drop here on the RSI to take us down to fill this gap and hit that 2023 trend line. So again, putting all the pieces of the puzzle together, I told you I thought we'd top, rally, and eventually move to new all-time highs, which we have now done. Don't think it's over. I remain bullish. We're going to end up reaching one of these trend lines. This is from the July peak right here. This is this red trend line right here is the boundary of a rising wedge, and that's right at that same level as the upper boundary of the rising wedge, the channel in the weekly time frame, I should say. This scenario would have us pull back, get a back test of the bull flag in the daily time frame. And again, this is the ABC move that I told you I thought was a wave 4, and that's why I didn't think the head and shoulders was going to play out. Thought it was a fake pattern, as I told you. It's now been proven correct as we've gone and made new highs, canceling out the head and shoulders pattern. I marked it here so you can still see it. I thought it was a fake pattern all the while. I believe that we are in wave 4. But this right here, if we get 5 subwaves here for minor wave 5, I think that, again, you could reach this trend line, the black one here, which would be the channel. I drew that the day that we reached the bottom there on the 13th of January. This red trend line here, which I've talked about, but I think that one of those trend lines is where we're moving towards. Then I think we're going to put in a major top. Now, this is the channel right here. Had indicators like the bullish divergence on the histogram warning that we're going to get a bullish cross on the MACD. And again, that's why I told you I thought we'd get a gap fill, but not drop below horizontal support at 56.770. And I told you that our trend line was at that area, at that gap fill area, and we moved just below it to fill the gap there. And just below that trend line on the weekly chart, the daily chart, the 2023 trend line. I think that the MACD will remain in positive territory, even on a pullback, and I think you're going to end up forming a larger, I drew that a little high, a larger divergence here on the MACD with this peak over here, and we may even see a divergence in the more recent price action develop as we get to wave 3, 4, and 5, as we get to the peak of wave 3, 4, and 5 of these smaller subwaves in the larger minors. Massive rising wedge going into this larger channel. See it here on the weekly chart. Again, told you that we'd come down and hit that trend line, looking for a bounce off the trend line with the Russell as well, and then eventually come up to this level. And again, if we take longer to get there, this trend line, it will go a little bit higher. Trend line is a target, not a number. I think we're forming this massive negative divergence. We did go to higher levels. I still think we go higher. I don't think it's done. I think the push higher will complete minor wave 5. That will complete the intermediate wave 5, which is 1, 2, 3, 4, 5. And then that will complete the primary wave 5 there circled and complete the cycle top. That's what I think is likely going to be the case here. Now, if we don't go as high as that upper channel line on the daily chart, again, this upper boundary of the rising wedge could be where we reach, and that upper channel line in the weekly time frame. And here I've marked a 5-leg push higher here for the minor wave 5 that would come into this trend line or maybe slightly overthrow it. So that's what I'm watching for, is which of these trend lines are we going to likely gravitate towards. Again, depending on when we come into contact with it, I think, again, about 6340 to 6400 or so, if we reach it after a pullback and then a very strong push higher for wave 3. But again, bouncing beautifully off this trend line that I was looking for right here, formed the bull flag right here that you could see. And again, I think that completed the 4, and I think we're 5. And then I think we're going to see that weekly divergence begin to play out. What could rattle the market is the Fed next week, again, continuing their hawkish stance. I talked about that in my last video. I'll link that at the end of this one. But the recession indicators, and I talked about the Fed. The 10-year yield turned back up again. If we could see it again, try to get a lower high, or even eventually try to make its way back up to get a double top at the previous peak, as I mentioned. It's a negative correlation right now with the market. So again, it's starting to turn up. If it gets a bigger rally with the Fed and their hawkish tone, it could get that pullback for our bull flag for a wave 2 before going higher, getting the wave 3, a larger minor wave 5. did an excellent job of marking the bottom. One of the things I was looking at, the bottom for the S&P 500, the turn off of the resistance zone of this trend line. Very well could see the rally still here because the Dow is back testing the broken trend line. I talked about it either getting a lower high or eventually going up to a higher high, hitting the trend line again. It does, it will form a divergence with the transports, and you will have a Dow theory reversal signal in the more recent price action. But again, Dow getting a remarkable rebound from when I predicted that bottom with the divergence in the daily time frame the week right before bottomed out. And actually the 2 days right before it bottomed out, Dow up 2.15% this week, up 962 points. It was up nearly 4% last week. The Russell was up just under 4% last week. The rally I was predicting for the market was one of the clues, not only with the trend line from 2023 low for the S&P and the gap fill from the presidential election. I told you I thought we'd have a continuation of the presidential election rally with Trump getting Trump's inauguration on the 20th. I thought we bottomed the week before of the inauguration, but bullish divergences on the Dow and the Russell daily charts really tipped us off to that bottom. Excellent signals, and also to the top, the trend line up here on the Dow and that negative divergence in the daily time frame on the Dow. Dow might form another Dow theory signal. We have this larger one with the transports going back to the Dow's 2022 high here. They formed a divergence in that most recent price action. They might do it again right here, something worth paying attention to. The Dow can make new highs. Bullish divergence has really nailed the top and the bottom for the Dow, and I talked about both of those signals when they were happening. Great job, great signals on the Dow and the Russell. So same thing, it hit the upper channel line. It topped out in late November there, November 25th. It bottomed out here. And again, the Russell was part of the reason why I thought we were going to bottom as well. Beautiful channel there. Remember, the S&P never did reach the upper channel lines. We did on the Dow and the Russell. The Russell will get a lower high and diverge with the S&P like it did back over here in 2022. Russell was unable to make new highs in 2022, where the S&P did. Bouncing off of that RSI 50 level as I thought, and again the 200 period in the daily time frame off of this trend line here in the weekly. And right here you can see the 200-day moving average, a black line right there. I told you it was unlikely we were going to go below it and remain below it. We're either going to tag it and bounce or dip below it and rebound, one or the other in all likelihood. We had dropped to almost 12.5%. We talked about the bullish and bearish divergences. Here's a November high right here. We talked about that at the time, and I told you I was predicting that we were going to come down to this level. We gapped down to it. I told you we'd likely reach this level. I told you that on January 9th and 10th, and again did it the very next day after the 10th on the 13th, Monday the 13th, and I talked about it that whole week about a bottom developing here surrounding this area. These bullish divergences on the Dow and the Russell really, well, it was very, very good information. It helped me. I hope it helped you. Now the S&P 500 made new highs. Nasdaq has not. It still may do it. I've drawn a channel in here to be watching to see if it does it, but it also may be that we have something like at the 2022 top where it ends up going sideways and ends up diverging with the S&P. That is possible because, again, often the S&P and Nasdaq diverge at tops, as I've talked about, and it does it over and over again. At the July peak, they diverged. Nasdaq made a lower high. S&P went a little bit higher. Did it in January of 2022 when the S&P peaked at the 2022 top. Nasdaq made a lower high. S&P made a higher high. They do diverge from time to time, so we'll be watching to see what happens here. Nevertheless, you got a bull flag. We broke out of it after the S&P 500 here. We broke out of it after Inauguration Day. The S&P broke out of it with the day before Inauguration Day on that Friday there. Again, I'll be watching the gap here from the breakout, which we did fill already on an intraday basis, and then we have another one there the very next day after that. And again, it was a 4-day trading week there, so we did fill the presidential election gap. Again, I do think the S&P and is getting that Dow and the Russell are getting the continuation of the election rally. Now, we never did fill the gap over here at 20,227 for the election rally gap there, but again we bounced out the 50 period moving average, the S&P, and again about that election rally before it happened because of 60-minute charts, and we were testing these 50-period moving averages. They diverged, by the way, at that low, and I pointed that out at the time. The S&P made a lower low and formed a bullish divergence. We got a higher low on Nasdaq, and again, that is a signal of a potential bottom like it was at the July peak for a top. Again, the jury's still out if the Nasdaq has peaked. Again, we have that topping tail in the weekly or in the monthly time frame. It means nothing unless it's confirmed. So far, it's not being confirmed, so we'll be watching to see what happens going forward. CD is back in positive territory. Again, looking for clues. Is it going to make new highs, or are we going to start seeing a tech sell-off as we see P make new highs? Will it diverge with Nasdaq? I showed you the diversions on the 60-minute chart of the S&P. It's that bullish diversions at the election low there that I talked about. Let's take a look at the 60-minute chart of Nasdaq. Nasdaq was down 127 points on Friday, down 0.58%. And again, I drew this little channel right here. We did end up breaking that channel here. You can see the bull flag. It was a bullish divergence as it tipped us off to that bottom. That's why I told you we were going to bottom the week of January 13th, and we did. Had it on the MACD. So again, we'll be watching to see, do we back test? You're now getting the 50 above the 200 here. Again, just like the S&P 500 60-minute chart. Now we still have a divergence here on the Nasdaq. We have a Class B divergence where you have two equal peaks. 21,925, I believe, was the peak for both of those peaks. On a closing basis, excluding the shadows, and that formed a Class B divergence where the indicator made a lower high, but you have two equal peaks on the Nasdaq. So Class B divergence, Class A divergence is when price goes higher and the indicator makes a lower. That's a Class A. Class B is the two equal peaks and the lower high on the indicator. So again, we'll be watching to see if we get a pullback or not. Again, I called a bottom, predicted the rally. I do expect a pullback at some point. And then we're going to be watching to see, can the Nasdaq make new highs? Does it end up diverging with the S&P 500? Here's the channel with the Nasdaq, again, excluding these lows over here, just connecting the low here and the low here, parallel boundary. We came just shy of it there at our peak in December. Still may go up to new highs and reach that level. Our linear scaling right here, we're seeing the MACD try to turn back up. Again, probably going to form a divergence or confirmation of a lower high in this most recent price action. We had a very similar situation over here, and this is what I'm talking about. We weren't able to make new highs over here on the MACD or on the price, and the MACD ended up validating a lower high right there. And we had the larger divergence. If I go back a couple of months here, you can see that larger divergence that developed that did mark the peak there in November. But when the S&P moved to new high, we got a lower high on the Nasdaq. So again, we'll be watching. Do we get something like that where they diverge, or again, do we go higher and see both Nasdaq and S&P make new highs? But again, we'll be looking for clues. For log scaling, we're back testing this rising wedge that developed right here. The log scaling, the trend line's higher, and again, it's got this massive rising wedge. So again, if we do end up clearing this level, again, this is a trend line that I would be watching right here on the Nasdaq. Again, it doesn't end up diverging with the S&P 500. A multiple point divergence that has given us that December sell-off. We'll be watching to see if it stops making new highs or if it continues to try to make new highs. Again, just like S&P, Nasdaq's hitting this long-term monthly trend line now. If it does go higher, that could be changed. Again, I'm excluding the shadow down over here, connecting these two levels, and then just drawing a parallel boundary from the peak there with the top before the bursting of the tech bubble. If we include this shadow, it would change the angle of ascent to a little bit higher levels. So again, letting you know that if it does move to new highs with the S&P 500, we could draw a brand new trend line, including that shadow, just at a little bit slightly higher of an angle, and still go to higher levels and reach the upper boundary. Or we may just overthrow it on this one. Again, sorry about that, had to cough. Again, the Dow overthrew its trend line, did the same thing in 1929, and then pushed back down hard. So it's going to be very difficult to stay above these longer term trend lines. But it could, if we do go higher with Nasdaq, call bottom with the Nasdaq along with the S&P for that week of January 13th. I just don't know if it's going to make new highs or not. I try to tell you what I'm thinking. I'm just unsure about that because I do know that they diverge at tops and bottoms from time to time. Just an important trend line I'm watching, and again, it may change if we do go higher. We may just overthrow it a little bit. We'll be watching to see what happens. Does the Nasdaq stop making new highs, or can it make a new high? See a rotation, and we start seeing a tech sell-off. What we did in late 2021 on into early 2022, and it ended up diverging with the S&P 500. We'll see if that happens again or not. I'm looking for a topping process to complete. A topping tail on the monthly time frame was a gravestone doji. We're watching to see if that will eventually be confirmed. We did go below it at the January low. We had it in December there, but it's not been confirmed or fall through. The candlestick means nothing unless it gets confirmation of fall through. So does Nasdaq go sideways, eventually break down and confirm this, or does it cancel it out and negate the signal by ending up pushing above the topping tail high? We'll be watching for clues, something we're paying attention to here in the monthly time frame on the Nasdaq. We're looking at this positive correlation, and it is pretty remarkable. And again, this is why I think the S&P is still going higher to complete the blow off top, and Bitcoin is not done yet with its blow off top. Again, I think they both finished. This is why I thought it was a fake head and shoulders on the S&P, and with Bitcoin, I thought it was minor wave 4. And again, I was looking for minor wave 5 to reach that upper channel line. So again, we failed to reach the upper channel line on Bitcoin and the S&P in both November and December. They both had the December to January sell-off. Again, 2 weeks ago, I predicted that would end, ahead of 2 weeks ago when we got the bottom. I predicted it would end on the 9th and 10th of January. It ended on the 13th, the very next day after. Talked about it in great length and detail on the 10th. I think we'll pull back, but eventually I think we're headed here with Bitcoin. But pretty remarkable. And then I think they'll both begin to price in the recession, which if you didn't watch my recession video, I went through some of the recession indicators, why a recession is about to start and everybody's denying it. There are many, many other indicators. I try to show them different ones every so often. And again, there are many recession signals flashing right now. It's just the Fed is in denial, as they always are, dismisses the recession indicators, as they always do. Bitcoin has this 5 leg push higher with 5 intermediate waves higher, and I think we're completing that with minor wave 5 to complete intermediate wave 3 that will complete primary wave 5, which is this whole move up from the 2022 low, which I think will complete cycle. The same with the S&P 500. The S&P 500, I think primary wave 4 completed at the 2022 low. I think that 5 intermediate waves going higher, 1, 2, 3, 4, and we're now in intermediate wave 5 that's unfolding in 5 minor waves, 1, 2, 3, 4, and now 5. This is why, again, the head and shoulders pattern on the S&P I thought was a fake pattern. We'll be hearing about a double top. We went back up to the highs just like Bitcoin, and again, if we get a back test of the bull flag, we're going to be hearing all about a double top. I don't think that plays out. I think we end up reaching the upper boundary. I think these highs from 2022 are pointing to the next high, intersecting with the upper channel line, and again, slightly overthrowing the long-term monthly trend line. And then again, I think we'll see a 20% drop, probably on concerns of inflation worries, and again, or the catalyst may be, but probably concerns about inflation, and the Fed will panic the emergency cuts. We could start seeing some signs of economic weakness. That could also be a catalyst, but again, I do believe that we are going higher, and this could take us near 6340, all the way up into the 6400 range, depending on when we reach it. Again, the trend line is my target, not a number. Again, because had we reached it in November, December, we would have been at lower levels. We failed to do that, and we had the December-January sell-off. That's bought the S&P more time, but again, I still think we reach that trend line and eventually get this sell-off. And once we do start the bear market, I think you'll see a 20% crash, and later we'll get a rally with the Fed, and then the selling will continue, and then we'll get another counter trend rally with the tax cuts and sell the news event, and 2001 So I think we dropped 50 to 65%. We could go lower than that if we try to go back to the highs back at the 2007 and 2001 top, but we may not do that until the next bear market. I think once the S&P 500 peaks and begins to usher in the bear market, and eventually we break this channel, probably go down and bounce off of it with when the Fed does an emergency rate cut, whenever that happens. Pause next week, again, making another monetary policy mistake. But eventually, again, I think we go down and test the 2022 low. That could be the wave A and try to bounce there. Again, a large ABC structure for the bear market. And then, again, this is the longer term scenario. And I think we sell off probably into 2026 unless we see it drag out further. Again, certain things we just don't know. But if we do start a bear market, again, I'm looking at this 2022 low as a level where we would likely bounce, and then eventually breaking that and eventually coming down and testing the 2020 low. That would be a 65% drop. A 50% drop would be, and just bring it up for you here. And again, that assumes that we come up here. And again, we don't know when we'll come into contact with that, so this may change just a little bit. But that would take us under a 50% drop, would take us under the 2022 low. So again, we'll be watching that. And again, the longest inversion of the yield curve in history. So if it does get uglier, again, we could go as low as the highs from the previous two bull markets in 2000 and 2007. That's probably not going to be the case, that we'll see a sell-off and then we'll get some kind of rebound back up that will be the next bull market that will likely not exceed this high and eventually go down to much lower levels, maybe that 1575 area from those two previous highs. Which, if I just zoom out here for a moment, you can see what I'm talking about. Here's a 2020 low right here from the pandemic sell-off. And again, if we turn up this area, be about a 65% drop. If we get something bigger, you've got this horizontal support from the two peaks in 2000 here, 2000, and then again in 2007. Like I keep saying, we could see a long period of an economic drawdown where we go nowhere, and that's really what valuations are telling us, where again, here you didn't go make new highs, you tried a little bit, you went 25 points above this peak, but you didn't really break out of this range, for 13 years and started making new highs. The market has these long periods of drawdowns. I think we're going to get that. I think we're going to get a sell-off and then eventually a new bull market that's going to last a while, and then we're going to get a bigger sell-off that could come back to these highs right here. I don't know that we reach them. Could. I remain open-minded, but again, I'm just trying to look at where we might find a bottom, and I'm looking at the pandemic low. I'm looking at a 50% sell-off. I'm looking at 65% sell-off, and we can also look at Fibonacci retracements. If we were to hit the 6340 area, as I think we could, or maybe go a little higher into the 6400s up here, a Fibonacci retracement of that from this low right here, a 50% retracement would come in at that pandemic low. If we go lower, you're looking at the 61.8 Fibonacci, then you're moving back towards these previous highs over here. So again, we'll be looking at the Fibonacci's once we peak and begin to turn down, but it's something worth considering, the Fibonacci retracements from this entire bull market advance, which I think is about to come to a conclusion. It's also worth considering that maybe we get a bear market followed by another bull market that will be followed by another bear market that will eventually take us back to the rising channel in the monthly time frame longer term. So just some ideas and some levels that we very well could reach. Now, why do I think a top is about to happen? Because the long term, we've averaged the long-term trend line in the monthly time frame again and slightly overthrown it. I think we will overthrow it a little bit more as the Dow did. Highly unlikely we're going to be able to stay above the long-term trend lines. This is we're going to overthrow the monthly trend line some more here and reach this level and then begin to top out. Why? Because recession's about to happen. The market will begin to price in a recession. I happen to believe the recession indicators, which are saying we're going to have a recession. Then you get all these folks on social media that scoff at that possibility, just like they did at the 2000 top, just like they did at the 2007 top. People scoffed at that back in 1929. I think we go higher. My signals remain bullish. I think we're going higher, but then I think we're going to peak. I think we'll probably sell off somewhere into 2026, maybe the summer, maybe a little bit longer. And then I think we're probably going to bottom out and start a new bull market. I think this ABC structure will take us down to much lower levels. Now, another reason why I think we're going up higher and eventually to that upper channel line is I think we're going to get a 200% Fibonacci extension of the first move higher from the 2022 low. If you look at this move right here, we've gotten a 1-to-1, and I think we continue onward and get a 1-to-2 and go up on into this level, maybe even overthrow it a little bit. But again, that is measuring to the 6342 area, very close to this trend line. When we come in contact with it, maybe a little bit higher if we take our time reaching it. But again, I think rather than topping out in December, as I told you, I told you that we were going to turn down. The divergence has told us that. I told you I thought we were going to bottom that week of January 13th. And I told you that back on January 9th and 10th because I thought we'd bounce off this trend line from the 2023 low and take us back up into this area right here. So again, I'm looking for a 1-to-2 Fibonacci extension, and I think that fits very nicely with this channel that I'm looking at in the weekly time frame.